Hello, and welcome to another update video about gold. So gold has dipped a little further since the last update. We talked about that in the last update, however, so that shouldn't have been a surprise given that the ideal target range for this C wave to the downside within a possible correction, a wave 4 correction, the ideal target area is highlighted here in blue. So that's what we talked about in the last update. It's quite a sharp move to the downside. Best, in my opinion, interpreted as an A, B, C structure. And then this C wave has now reached the standard Fibonacci extension area, which is located between the 100% extension and the 161.8 extension, which would involve a slight break below standard Fibonacci support, but that wouldn't be a problem necessarily. So again, this is the next support area to watch here, and I'm not telling you it will definitely hold. I mean, the trend is down, right? The market now needs to give us a reaction. We need to see some kind of a reaction. Overall, I'm still looking for higher prices in the gold market, but we're obviously getting close to like a long-term target, right? Keep in mind that we have been talking about a bullish gold market since I started covering gold on this channel, right? Which was in 2022. I think pretty much at this low. No, I think actually when we were moving down here, I started to cover gold. We were getting a reversal in a target area here. And then we have a 3-wave move up now. We're getting, I mean, most of this rally is done. I mean, pretty sure. At least, you should never say I'm pretty sure, but that's the thesis at the moment, yeah? So we have from this 4th wave low, a 5th wave to the upside. We have only 3 waves up, however. 1, 2, 3. I like to see another 4, 5. But this wave degree is likely not happening yet. So I think it's an internal wave 4 within this 3rd wave. Then we get a large 4, then a large 5. That could complete it. But as traders, investors, typically, at some point it makes sense to reduce risk when we get close to the completion of a rally. So traders, Elliott wave traders, tend to take profits towards the end of a third wave, which is where we were already. But we could get one more high in this 3rd wave, larger 3rd, before we get a 4-5 pattern. So just to give you the idea of the context, that I think we're getting close to the end of a larger cycle, but we're not there yet. So I'm still looking for higher, best I can tell at least. But at the moment, my idea is we're in a down. So, I mean, logically, clearly, we're in a downtrend. All we can do is highlight some pivots to watch, right? And what I'm tracking here is a correction which is still in 3 waves. So as long as the pullbacks are in 3 waves, and I know it looks sharp, but it's a 3-wave move, I'm overall giving the bulls the benefit of the doubt. But if we start to break support levels in 5 waves, which indicates the trend is down, not only on this wave degree, but we flip to a larger downtrend on a larger degree, then we always can adjust, right? But even then, let's assume that happens, and let's just assume we get some kind of a bearish like 5-wave move down, then this 5-wave move again should then be corrected. That means a correction to the upside. So we should do this anyway before breaking down further. So I don't think there's a absolute need to panic or rush in getting bearish or something. I mean, a 3-wave move down typically doesn't give us a clear short trade setup from an Elliott wave point of view, at least not. We would need 5 waves down, 3 waves up for that. A 3-wave move down tends to keep the door open for higher prices, and it's a 3-wave pullback at the moment. Okay, what do we see? We see support levels still holding. Okay, we're getting challenged, but they are still holding, but without bottoming signals. So at the moment, all I can say is we are in an area where a reversal could happen to the upside without clear bottoming confirmation yet. I mean, is this something? I mean, maybe this is a small A, B or something, but it's too small. What I'd like to see, ideally, I think next week could be quite decisive, quite important for the further direction of the gold market in the coming weeks and months. We want to see a break above that high 2006-26 next to indicate that a low of sorts has formed, and then we could be moving up. I mean, at least in the yellow B wave, which would involve possibly even a larger wave 4. But again, that will possibly become clearer in this move to the upside. I slightly lean towards the white count, which allows for higher prices directly in wave 5. But we'll see. I mean, for now, it's a 3-wave pullback. Best I can tell, we should get one more high, maybe even 2 before a much larger correction starts. And 2,522, 2,516, and 2,489 are the next support levels. That's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.